Welcome everybody. Today I'm going to show you a document that I'm going to provide for everybody that watches this channel for free on how to do fundamental analysis and trading on cryptocurrencies. Right? Fundamental analysis is not like technical analysis. I personally do not like fundamental analysis that much because one is that you can make a fundamental judgment on a particular asset and be right, but it will take a long time for the event to occur. For example, you could say that fundamentally the US dollar is flawed, and that's correct. It is flawed, but it will take a long time before it actually collapses and your fundamental analysis on the US dollar plays out to be correct. This goes true with a lot of different assets. So be careful with fundamental analysis, because you could say, okay, you can find a coin that's great, but will take a long time to actually give you a profit in the future. So for example, I did fundamental analysis on Dash a long time ago, and it wasn't until 2017, of course, that it really did well. But back in the day, it was only $2, and that's when it was barely started. It was actually called Darkcoin. It wasn't even Dash back then, but fundamentally it was very, very strong. And so I had to wait 3 years before I saw that profit, that a huge profit in that coin. Now, I don't hold coins for that long. I do sell in and out of them. And if you want to learn how I do that, I use Brian's little old lady method of trading. And that's an excellent style for trading, especially if you don't have a lot of time. And if you want to check out how to do that, you could either head over to therationalinvestor.com, which I'll leave a link below. It is a link that will give you $50 off if you're interested in taking his courses. I took his courses, and I'm a level 3 on his site, and you can chat with me on the site if you do decide to take his course. His course is a little expensive, but worth the money. But if you can't take his course and would like to learn how to do the little old lady style of trading, Brian's little old lady style of trading, I have some videos on my website, www.davincicodes.net, where you can check out just the basics, very basics of trading Brian's little old lady style of investing in cryptocurrencies. So you could go ahead and check that out. Now onto this document. Now, this document will rate all altcoins and cryptocurrencies in two ways, basically. They'll have a tier rating, which is mostly subjective, and the second method will be a point system. My opinion is that the centralized system can and always be corrupted by powerful men. Thus, stable coins will not be included here, and any limit on the number of nodes users can connect to and route payments or accomplish a core task of the coin cannot be considered viable cryptocurrencies for the long term. And why is that? Well, you could read here, JP Morgan and Steel Shipping and Powder interests hired 12 high-ranking newspaper executives to determine how to control generally the policy of the daily press throughout the entire country. And now, why did they do that? They did that so that they can actually put in our current monetary system and install the Federal Reserve and the income tax. Yes, it's true. We didn't always have income tax. It was only when the banking system put in the Federal Reserve back in 1913 that Americans actually started having to pay income taxes. Not everyone, but the camel's nose was under the tent, and it was only a matter of time before taxes were implemented. Now, the taxes, believe it or not, are just so that it provides value to the debt, the printing of the money to cover the debt. So they basically enslave the population, the bankers, when they create the money for free. And that's why cryptocurrencies was invented by Satoshi. Yeah, I'm not him. Anyways, moving on. Here I have these tier ratings, right, are generally subjective, and I'm going to be modifying this document along the way as I see fit. And if you can help me out, if you see something that needs to be corrected in this document, right, please let me know, and I will make the change. Also, you can get this document free. The link will be in the location below, and you'll be able to check out this document and rate your coin appropriately. Now, I did say on MMCrypto that I was going to start rating coins, and I did start looking into rating the coins myself, and it's just too much work, and I have to finish Pandora's wallet. This is my main goal, is to finish Pandora's wallet. I'm not making it to make money to sell it to people and stuff like that as much. What I'm trying to do is make it work for me so that I can get my cryptocurrencies off of the exchanges. And that's my primary objective. Moving right on, back to this fundamental analysis document. The cryptocurrencies, for tier 1, the cryptocurrency must be in the top 25 market capitalization, excluding stable coins. So if there's any stable coins in the market cap, take them out, and that will bump other coins down. The cryptocurrency must not be centralized, meaning there is no limit on the number of nodes that can exist on the network, or the number of nodes increases in some fashion over time based on usage. Also, it must have a solid marketing and promotion behind it. So really, even though a coin might be in the top 25, it should be promoted very, very well. Because you have to see it in news articles and so forth, seeing that they have a marketing department or something like that. Those coins are definitely our first tier coins. You can see that with Bitcoin, Ethereum, Dash, and Litecoin, amongst others. So those are first tier coins. Now, there's something here about the nodes that might be a little confusing. For example, Ethereum might not make it into this first tier category because they are actually going to limit the number of nodes, that is, the places where somebody can actually connect to in order to connect to in order to send their transactions. And if that happens, what could happen is, again, right, the bankers will just take over the nodes or just buy them out. So we got to watch out for that. And it might not be bankers, right? Especially going forward after the bankers collapse. It might be a group of other people that tries to take over any particular cryptocurrency. And to avoid that, anyone should be able to create a node so that it makes it difficult for them or next to impossible to manipulate the cryptocurrencies. Yes, I agree. The currency can be just forked away if they try to do that. But in the future, forking might be a lot more larger task to accomplish and pull off very well. So we want to avoid, as much as possible, centralizing the nodes. And so giving everybody a chance, even mom and pop at home, to create a node so that somebody else can connect to and send transactions. This will also avoid those banksters from going, okay, you know what? I can like just prevent somebody from making a transaction. Yes, of course. What about cryptocurrencies that are completely private? Shouldn't they be allowed with their limiting their nodes? You know what? I'm going to have to get back to you on that, because I just thought of that right now, and that's a good point. But moving on to second tier coins. These cryptocurrencies are up and coming, and they are strong in the have a strong community and developer support, but are lacking in other areas. The project is interesting and different enough from Bitcoin to stand on its own. These coins must be listed listed on 5 or more exchanges and working end user wallets. So, for example, if any kind of wallet doesn't have, honestly, if it doesn't have both Mac, Windows, and Ubuntu, right? I don't think they would fall into the second tier coins, because that shows laziness in the developer, and on top of that, especially since they can most of the second tier coins are just copies of Bitcoins which support all three. So why wouldn't they support all three as well? So it's not like they don't have the code base or the developers to accomplish it. So a second tier coin, for me, is missing the marketing piece. Maybe it's not well marketed. It's just one developer, maybe, but he's there. There's a lot of people around that are supporting the developer, and the coin has some sort of interesting feature to it that no other cryptocurrency has. Third tier coins are basically just straight up copies of Bitcoin. These, in my point of view, and these cryptocurrencies may have a developer community, even if they're doing nothing at the moment and have little or no roadmap. Unfortunately, I would consider, believe it or not, Dogecoin in that group. I know I'm going to get a lot of hate for that, but I'm sorry. Dogecoin for me is a cute little coin. It's not going to go anywhere. It's not going to go to zero. I'm saying it's just that it's not a well supported coin with a good direction. It has direction or something like that that's going to make some real changes. Yeah, I could say that. You could say that the same with Litecoin, but no, I would say Litecoin is doing a lot better. Anyways, the alts that fall below 10 million in the market, but are listed on 3 exchanges, can also fall into this category as well. On the fourth tier coins, these are like dead, broken chains or dying coins with no development team working on it. Little community support and no significant changes to the code base over years. Over a year or years. Also, the cryptocurrency project with a market capitalization of less than $1 million, the odds of it turning around are slim to none. However, if the coin is traded on more than one exchange, pump and dumpers will attempt to run the coin's value up at some point, and profit can be made. And at that point, profit can be made. So it is extremely risky to invest in the fourth tier coins, and you can do so, but make sure you put very little money into that, because the odds are they're going to go to nothing. For example, MaxCoin is definitely a fourth tier coin. Anyways, moving along to the scoring part of it. The scoring part basically gives you a total of maximum of 7 points in positive and a minimum of -7 for your coin. So if your coin gets -7, Jesus, you might want to stay away from that one. Anyways, it's really simple. Any coin that has less than 25 million supply of coins, meaning the maximum coins that they can ever create is 25 million, that gets a +1. The reason why is that the less coins there are, the easier it is to, the less chance that, you know what, the coin's going to like trade with thousands of at a time, and people have millions and trade with millions, and like price is like really less than a penny, and it's difficult to get the to make pricing in dollars. I think that 25 million mark is a good number to go with. My professor also taught me that the 25 million is good with stocks, so I'm going with that as well. In the top 25, the coin must be in the top 25 in market capitalization, excluding the stable coins. So if it falls, if you take out all the stable coins that are in the top 25 and your coin falls into, hey, guess what? It got a +1. New features added in the last 6 months. Yeah, you know what? If the coin is making some major changes, not going into the GitHub and seeing them changing the version numbers or making comments or heck, renaming all the Bitcoin to the name of the coin. Some developers do that and make it look like they're being active on their GitHub page. If that's happening, that does not count as a +1. But if they're making real changes, then go ahead and give them a +1. Trade history going back past 2016. That's a must if you ask me, because then it shows that the coin has gone through some ups and downs at least once, and I think, you know what, I want to change that. I really do, because that is 2 years is not enough. I want to go 2015. Sorry, that wipes out a lot of your coins out there. But the reason why I want to include it in like at least 2 years of up and down in the market, and 2017 was an off market, so off year market where cryptocurrency really didn't go down, and so I'm not going to include that year, and so I want the 2 years of history for me to say, okay, give this coin +1, because now you can see that, hey, you know what, it came up and it went down, and you can see maybe even an all-time low, and probably hasn't even gone past that all-time low. So you got a little bit of history to figure out whether or not this coin is going someplace. Listed on 5 or more exchange. If your coin is listed on 5 or more exchange, it deserves a +1 for sure. Because you know what? It means that the coin is not some sort of scam, most likely, and it's going to be going places. Of course, it's got to have all 3 operating systems, support for all 3 operating systems. Most coins do, so they will get a +1. A roadmap of the future updates and with established dates or business plan. So, for example, if they have a business plan in order to achieve their goals, or have a list of roadmaps like Ethereum has of when they're going to make changes, when those changes are due, even though they might be late, that's fine. Give them a +1. Now, to get a negative number, if they like, for example, most coins will get +1 here, but this is when they start getting some of those points get taken away. So if they have, or if they're listed on one exchange, you got to -1 point. If they have greater than 249 million coins, sorry, that's just too many, too much, too many. -1. If the market cap is lower than $2 million, sorry, you know what? This coin is very weak. -1. No devs on the Bitcoin talk. So, for example, if they have a forum, right? Not just Bitcoin talk only, but if they have their own forum where people can discuss and comment, and people can talk to the developer. If they have some sort of area and that the developers communicating with other, like Slack or something like that, then and they're not, but they're not there. Maybe on I don't know, wherever places. If they're not there and there's no changes in the last 6 months, then they get a -1. If you Google scam and the name of your coin, and it shows 7 or more results in the first 2 pages, odds are. Anyways, the coin with a coin with a trade history of 1 year or more, and if it has a trade history of 1 year or more, basically, and is hitting all the time new lows at this point in time, -1. So if you go back in history on the trade history and you see that prices are lower than they've ever been, then it's getting a -1, and you should be out of there running from that coin most likely. But it all depends, right? Some coins, even though they've hit all-time lows, they're still pretty good buys because of other features that they might provide to the community, and they might get other points. A limit on the number of people that can run nodes to support the network. I'm sorry, Ethereum, but if you go and do your limit of what I think it was 1,024 or 24 nodes or something like that. I can't remember. If they've already done that, I remember reading that they were limiting the number of nodes. If they've already done that and they don't have a growth plan for those nodes, Ethereum should get a -1, because they are setting themselves up to be controlled by the banking system or other powerful entities in the future. So that's my scoring system. And if you read through, I'm not going to go through the trading part of it. You could go and read through there yourself and decide if that's how you want to trade, how you want to buy your cryptocurrencies. But that's my altcoin fundamental analysis and trading document. And you can check it out yourself in the link below, and you'll be seeing my changes as I make them going forward. So keep coming back to this document if you like, checking it out, seeing what changes I've made it, and hopefully I can improve it into a solid document that everybody can use, and decide which coin is best. So that's it for now. Thanks for watching, and I look forward to hearing from everybody in the comment section.